Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap GRNY Shots ETF. This is our update for the week of September 25th. Let me start with some particulars. As of September 24th, the price of GRNY Shots ETF was $24.87, the net asset value of $24.86, and $2.875 billion of assets under management. Over the past week, GRNY Shots gained 0.9% compared to a 0.58% gain for the S&P, or 32 basis points of relative performance. Year-to-date, GRNY Shots is up 24.55% compared to 13.95% for the S&P, or relative outperformance of 1,060 basis points. Let me start with some macro, which is in our view that equities are still in a strong uptrend. Now, you may have noticed that stocks wobbled a little bit this week, especially in the last few days because of technology. But the S&P 500 is still comfortably above the 20-day moving average, which is 6602. And as you can see here, the last 5 times that we got near the 20-day, since the April lows, the market had a nice bounce. And that's our belief too, that in the short term, stocks are oversold. And if you ask yourself, do we think the market is expensive now? Keep in mind the S&P is about 10% above its 200-day moving average. Now, is that expensive or overbought? Well, as we highlight here, since 2022, there are 3 times where the S&P was at a higher level relative to its 200-day moving average, 13 to 15%. And as we highlight here, those indeed marked local tops before the start of a larger correction. So I think it's better to think about the market as getting close to that, but it probably needs to gain another 5%, which would be 69.50. And that's a lot of upside, and it coincides with the fourth quarter rally. You may be wondering if the Fed is going to be hawkish, but keep in mind that AI is really raising questions about the labor market, and that's what the Fed's going to care about. St. Louis Fed did publish an interesting study, and they showed that if you look at AI exposure rate for industries, low to high, and then look at the rise in unemployment, low to high, you can see that it's highly correlated. In other words, industries where there's a lot of AI exposure are seeing the largest displacement of workers. And so that ties into an observation, which is that we may be witnessing the early stages of AI-driven displacement. And that's going to keep the Fed dovish. Another thing to be constructive on stocks is that, this is from B of A, that there's lower leverage today in the financial, in corporates. And that's a good sign. So let's talk about GRNY stock performance. Well, let's look at the top 5 performers over the past week. It's KLAC, 10 Core, Quanta, CrowdStrike, Robinhood Markets, and Palantir. Okay, and these are all AI-related trades. The bottom 5 performers are Expedia, Live Nation, Amazon, Axon Enterprises, and S&P Global. And in terms of style, global labor suppliers was the best theme over the past week, followed by energy and cybersecurity, and then style tilt. So that's it for now. Thanks for listening, and I'll speak to you soon.